Money is so personal. It's so empowering. It's such a tool. And to be spoken down to or say, don't worry about it. I got it. Just trust me. That just doesn't feel right. And so having someone come to Arta and say like, thanks for just taking the time. Thanks for walking me through it. Thanks for helping me understand where I'm at, what these other things are, what is or isn't for me. Thank you for not selling me everything. It feels good. And it's those small moments that really make me feel like we're doing something the right way.
Tracy, I've been looking forward to this conversation for so long. So thank you so much for being on Live Long and Prosper. It's finally great to have you on.
It's good to be here. Thanks for having me.
Fantastic. Okay. We're going to start with a few lightweight warm-up questions. Okay. Stuff I know, you spend 20 hours a day talking about it. So, you've dedicated your career to private markets. What are these? Can you talk a little bit about what private markets are for like the regular person?
Happy to. It doesn't necessarily come up at dinner table conversation. So that's why you hear me go on and on at work. But it's everything that is not your publicly traded securities. So most folks own something like the S&P 500 or maybe stocks and bonds. Private markets is the rest of the 80% plus of the economy that's not publicly traded.
I see. Can you give me some examples of what kind of companies are these? Like if I was your aunt, maybe having a Thanksgiving dinner with you, or your uncle who, is savvy, doesn't know so much about private markets.
Yeah. And that's assuming people's eyes haven't already glazed over. But, things like venture capital, private equity, maybe even hedge funds, private credit are coming up more and more in regular conversation and news cycles lately. And I think folks are kind of getting savvy to the fact that these might be compelling tools, but they don't quite know how to access them. So think of a company like, now I usually just grab something here on my desk, like the company that manufactures these nail files. It might be publicly traded. Odds are it's probably a privately held consumer business, might even have private equity money behind it. But if you kind of look at the world around you, it's these names that you might not recognize. Odds are it's likely a privately held company.
Interesting. I remember you once telling me about how one of the private equity companies invested in one of the largest nail manufacturers in the US. And they helped them buy new machines. And then suddenly the company, which was private, was much more productive and hence more valuable. And then they took it public again later.
Yeah. And you think, public markets, they're constantly scrutinized by stock analysts, day traders, individuals like you and I. And every move that they make, they really need to think of their next quarter earnings and how it's going to impact those. Versus what you just said, a privately held business isn't necessarily up to the same onus that day trading puts on it. And so you can make decisions like, I need to take capital and invest in new machinery to, in the long term, make me more productive. And that's what's rewarded over kind of 3-5+ year hold periods. Or, when one private equity company buys that business and chooses to sell it in the future.
That sounds great. Thanks for getting into that. Tracy, prior to this, you were at an endowment, you were at one of the top private banks, European private banks in the world. How have your experiences in these like incredible institutions shaped how you think about private markets and investing?
Yeah, I've had this weird job where 80% plus of what I've always done is asking questions, right? And so it's digging at what is an attractive opportunity set. And once you've identified that, who are compelling players in that opportunity set? And once you've identified that, what made them compelling? Can they continue to be that? How are they incentivized? How internally are they aligned to do that? And maybe it's selfish or not that exciting of an answer, but that's a really fun position to be in, to kind of dig into that second, third, fourth layer question to get into the why. And that really spans across asset classes. It's been a unique pivot from, understanding where are these top tier opportunities and the opportunities that are likely to continue to outperform broad markets. But now going from the question asker to kind of the person who has the answers to those questions has been a little bit of a shift for me lately.
And how have you adjusted to that shift?
You tell me. I don't know. It's fun to be able to talk with people about it more. There's almost this dichotomy of how people discuss private markets. Either finance is bad, I hate Wall Street bros, or I want to invest in the flashy thing, whether that's startups or Bitcoin. And there's this massive universe in the middle that no one's really cared about for a while. Well, individuals haven't really cared about for a while. And it's fun to kind of demystify that with folks, explain what is this tool? How does it work? Why does it work? What should I expect or not expect from it? Uh, and empower everyday people like you, me, and whoever might be listening to utilize those tools for their own benefit.
And Tracy, you do that so well. I've heard it from so many of our members. Oh, after one conversation with Tracy, I feel so much more informed and confident. So that's always been fantastic. So I want to move a little bit from private markets and your career and me bring both together a bit. So, one of the interesting trends, one of the things that you've done in your career, which sort of seems to map how private markets are moving, is gone from like, an endowment to a bank and now to a wealth platform that's bringing this to many more people. And this move towards sort of broader democratization of this very powerful asset is something that you've done in your career, and we see it happening in the industry. Can you talk a little bit more about this? Like, why is it happening? What do you see happening? Where do you see it going?
Yeah, I think there's a few different schools of thought there, right? And maybe the rosiest is, folks want to democratize access to high quality things, whether that's alternatives, certain investing instruments. And part of that means making it more accessible to more individuals. The early days in my career, like you said, I had the benefit of working at an institution that had very deep pockets. And so a fund manager would approach one of my prior employers and say, this is our strategy. Here's our performance. We'd love to work with you, knowing that the investment in their time and cultivating a relationship with us might result in a massive check. That same time and relationship cultivation needs to happen for private wealth channels too. But the reality is that the checks come through smaller and with higher velocity. And so these private managers are balancing, how do I continue to diversify my customer base? How do I continue to provide access? But how can I still do it in a way that makes sense for our business? And a lot of that looks like working with folks like an Arta, like a private bank, like a financial advisor, to be that conduit to make sure individual investors understand what they might be putting their money into, but they can also work well to provide that level of access. I think the skeptics version is, oh, by the time this hits private wealth, is it even a good product? And I get where that question comes from. But the reality is these firms are running a business and their investors are their customers. And any sound business wants to diversify their customer base. Endowments face very similar pressures. Pension funds, sovereign wealth funds tend to reference fund managers with each other. And that ends up with groups and pockets of investors moving very similarly. Adding private wealth to that mix shift of investors just further diversifies that business, the private fund managers and customer base. So you can be skeptical and say, by the time it hits us, is it even good? But smart business leaders are always going to want to diversify their customer base.
That's such a powerful insight, right? Like, as individuals, we have to diversify our portfolios, and these private managers are doing exactly the same. They're diversifying their customer base, and that makes them more resilient. That's super, super insightful. You touched upon one of these misconceptions about, is the product that finally comes to the private wealth space great? Are there any other misconceptions that, you'd be like, oh my God, why do people not understand, that you wanted to sort of dispel?
I think there's this blanket phrase of more risky that gets thrown around. And this isn't investment advice. I'm not going to sit here and tell you something is more and less risky, but there's so many different measures of risk, right? There's liquidity. Might you turn around and need this money tomorrow? If yes, then you probably shouldn't lock it up in a 10-year fund. That's one measure of risk. Another measure of risk is the underlying transparency and readily available information. So with a public stock, you see how that price moves intraday. You can see the news about the company. You see quarterly filings. With private companies, you're not subject to that same immediate level of information. So you might think of that as one level of risk. And then there's kind of, with underlying strategies, different risks. So with venture capital, betting on a startup is inherently more risky than betting on a company that's had 2, 3, 4 decades of solid cash flowing performance. And so I struggle with the notion of, oh, private markets are more risky, because I don't think that's a helpful comment. Like, you need to take a step back and say, what risks are super sensitive or personal to you? And how are you comfortable allocating your money against those?
That is so true. And it's great you called it out. We need to understand investing means risk, right? But what risk are you comfortable, and what risk is appropriate for the type of returns and your financial goals that you are looking for?
Well, there's always this question that we get of, what is the risk that this could go to zero? Like, on the curve of every possibility out there, it's on it. The same way this could potentially go to 100x. Do I think either are likely to happen? No, but they could. The exact same way that, every single one of the 500 companies in the S&P 500 theoretically could go bankrupt. Will it? Probably not. But, the point of investing involves risk. Exactly. So I'm not going to sit here and tell you there's zero chance it goes to zero. There is a chance, but it's the likelihood of that chance. And, that's a great question that you just asked is, understanding the likely band of returns, what drives out or underperformance. And, if you want the chance of outperformance up and up and up, you tend to be taking more risk with that. And so just understanding kind of what band you're comfortable with when making those decisions.
And so, Tracy, one of the key aspects of your job is essentially to get the most return from the least risk, right? And improve that trade-off in a way. And so how have you approached, selecting various funds and other things for private markets to sort of optimize for that?
Yeah, it's such a qualitative and quantitative question, how to pick the right fund managers. And you can look at historical returns. You should look at historical returns. How have they done in a vacuum versus peers versus other markets? What has created those returns? And taking that whole bucket of understanding what has happened in the past and pairing it with the qualitative of who's at the firm now, what is the broader market dynamic looking like, what are the incentives of those fund managers to deliver XYZ return, and do you have conviction that that set of qualitative factors is likely to help the fund manager continue to the performance that they've derived in the past? I don't know. I just summarized my whole job and career in 20 seconds, though. So maybe there's more to it than that.
No, but it's, by the way, if people are not able to summarize their jobs and careers in like 20 seconds, that's a deep problem. They don't understand their own life very well. But in terms of understanding, let's go a little bit more further down that line in terms of, if I'm a new user who's never done private markets, like, it's pretty overwhelming. You've got venture capital, you've got private equity, private credit, private debt, so many different types of things. What's the easy way to start? What's like the first step that I can take?
I don't know if this is the cool techie answer, so forgive me, but talk to someone, ask questions. You don't have to make assumptions. It's an extremely broad, multi-trillion-dollar industry with thousands of different opportunities. Of course, someone new to that industry shouldn't be able to hone in on the perfect singular opportunity for them. So take a step back and chat with someone knowledgeable in the finance ecosystem and say, I've heard about these markets. I think I should be up-leveling my portfolio, but I really don't know how I should be doing that. Hopefully that person turns around to you and says, up-level in what way? Are you trying to lower your volatility? Are you trying to maximize your growth potential? Are you nearing retirement or quitting your lucrative job to go to a startup, and you might be trying to mimic an income stream? Because depending on those answers, you should be looking at very different products. So if you're comfortable saying, I don't need some bucket of my money for an extremely long period of time, and I want it to grow, let's start talking about venture capital or private equity. If you're in the startup or retirement bucket and it's weird to not have a steady income, let's talk about real estate or private credit or infrastructure. And if you're looking to create a whole portfolio, kind of rearrange your whole picture, let's talk about everything. But, when we sit down with our members here, it's never about selling something. That doesn't feel right. everyone wins when you better understand what you're investing in, what you should expect out of an asset class, the time horizon you can expect it over. We never want investing to be this like stressful black box thing. We want people to go in kind of eyes wide open about what's going to happen here. And that sets you up better to understand when things out or underperform, why it's happening, what you should or shouldn't be getting excited about, have better educated questions to ask. And I think when we get to that point with our members is when the magic really starts happening. You start to have really powerful conversations and people feel a lot better about their financial picture. Of course, a big part of it is doing better, right? You want to feel good about what you're doing. You want to sleep well at night. It's not fun to stress about money, and investing shouldn't contribute to that stress.
That's so true. Tracy, you've helped so many of our members. I personally received so many emails about, Tracy's fantastic. She really helped us. Is there any one experience that was particularly satisfying and memorable to you that you could talk about? Obviously, we don't take names.
Yeah. Again, I don't know if it's all that exciting, but I remember a woman approached us and she's this rock star, runs her own business, has a few children, seems to be super social, like one of those superwomen who does it all. And she set up some time to chat with us and was like, look, I think I'm in a good spot with my financial picture, but I really don't like the way my wealth manager talks to me. He assumes I don't understand this. He has a very trust me mentality. He's not explaining what he's doing. I think he's doing okay, but realistically, I don't have enough knowledge to understand whether he is or isn't. And that bothers me, not to mention how much money I pay him for a subpar experience. And that's so frustrating. Like, money is so personal. It's so empowering. It's such a tool. And to be spoken down to or say, don't worry about it, I got it, just trust me, that just doesn't feel right. And so having someone come to Arta and say, like, thanks for just taking the time. Thanks for walking me through it. Thanks for helping me understand where I'm at, what these other things are, what is or isn't for me. Thank you for not selling me everything. It feels good. And it's those small moments that really make me feel like we're doing something the right way. There was one other, and I'm just going to go off on this tangent, but when we were showing some of our AI and co-pilot tools around private banking, someone made the comment of, wow, this is really empowering for a wide spectrum of people. There are so many individuals in this world who have insane social anxiety, don't like speaking to humans, and will never have the same quality of a wealth journey as those folks who are comfortable walking into a private bank. And what you just gave someone by enabling those same financial tools is power over their picture that they otherwise wouldn't have had because they have a cripplingly anxious approach to entering traditional channels. And that's just another one of those aha moments, like we're doing something right, not just by democratizing lower minimums and high quality funds, but thinking through an entire product that lets everyone win, irrespective of the individual, investing tools that are on that product.
Oh, that's so beautiful. Thank you so much for doing these and for sharing that, and for just sharing these stories. Yeah, one question, you mentioned a couple of different types of investors. Have you noticed a difference in the type of investors from, say, when you were working at a private bank to what you're seeing at Arta, or between, say, age demographics? Like, are they behaving differently? Do they act differently? And can you share a bit of light on that?
Yeah, well, realistically, I've only ever personally dealt with institutional investors. And so you think of, endowments, pension funds, sovereign wealth funds, maybe the ultra high net worths of the world. And so working with individuals here at Arta is a little bit of a new world to me. And one thing that is clear is when someone asked me that exact same question, like, what does your average customer looks like? I don't have a good answer because it really spans a spectrum. I've spoken with teachers. I've spoken with already banked individuals. I've spoken with folks in their late 20s, and I've spoken with folks in their late 70s, men, women from across the globe. And so when someone says, what's an average Arta customer? It's like, I can't explain a person to you. I can just say someone who's looking for a little bit more.
That's true. And are there any broad categories you see in terms of like differences between, say, older people and younger people? Are younger generations investing differently?
That's a good question. Well, I think younger generations are more comfortable investing in a tech-enabled way. So, doing banking on your computer or investing through an app. And so I think the comfort level of, what is Arta is there for them versus maybe older generations are, I'm clicking things on my phone and all of a sudden I have hundreds of thousands of dollars invested. That feels off. But, we work with some of the largest custodian banks in the world. We have a deep wealth of compliance and legal resources here in house. Like I get that the end experience is the app. I think that's a no-brainer for younger folks versus, some of those, okay, but how are you legit is more of a question for maybe the older audience who approaches us. But in terms of the individual tools, I've been surprised at how universal some of them are. Things like venture capital tend to be longer dated. So perhaps that client base skews a bit younger. But on the flip side, I a few days ago got off a call with a client who brought her daughter on and said, this is a 10 plus year fund. I hope I'm around to enjoy it. But if not, I want my daughter to know what might be coming her way.
That's so powerful. That's beautiful. You start talking a little bit about the role of technology and how Arta views it. Like, how do you see technology sort of helping along the private markets and private investments or transforming this space?
I think it helps democratize a huge education layer, right? I think, the private banks and the RIAs did a great piece by starting to make these instruments more accessible, but so much time has to be dedicated to making sure that people understand them. And so if you can have tools like virtual sessions or read-alongs or a suitability click-through in your profile, you start to have more inputs on your overall understanding, right? No two people learn the exact same way. So assuming that speaking with a relationship manager is the one and only way for folks to understand what they're investing in is probably a little bit misguided. Technology plays a huge role in adding multiple ways that folks can be learning, whether it's a webinar, whether it's AI co-pilots, whether it's a digest and kind of learning program that sits in an application or on social media. There are so many different avenues that you can explain something to a group of people.
Absolutely. So Tracy, let's change tracks a little bit and maybe dive into one specific type of people from financial services. We've seen a lot of people from financial services actually use Arta. And in many ways, one would think like, hey, they work at all these banks and private institutions. Why do they need to use Arta? Do you want to share a little bit of insight into like why we've seen people from financial services come to Arta and what like your experience has been dealing with them?
Yeah, there's probably a few things that go into that. I know when I came over to Arta, a big piece of it is being at major financial institutions and seeing the quality of products that exist. You then go back to your personal life and say, oh, I don't have any of those. So you go into work, you work on these fascinating and compelling things, and then you go into your personal life and you can't invest in any of them. So coming to Arta was a little bit of my trying to disrupt that, especially on the private market side. But I think for folks in financial services in particularly, the last thing they want to have happen is, leave their finance job and all of a sudden someone's selling them everything. And so when you work on Arta and kind of go through the proper onboarding and suitability, you're then empowered to self-serve to a certain extent. And what I mean by that is, if a structured product offering is right for you, it's not going to be pushed down your throat by whoever your relationship manager is because it's the flavor of the month, and you're not going to follow up the next quarter with a new private equity fund. And then they're like, oh, wait a second. Now that we're in tax season, have you considered this structure? Those things stay available on Arta. And we've kind of created this ecosystem where we're not pushing anything or everything at any specific time. And for folks in financial services who have an understanding of what they already want, that's really compelling to not be sold everything. And so they really like the self-servicing aspect of, I don't need to sit down. I don't need to go through my portfolio for an hour and then talk about all your new products for the next hour in your ivory tower office. They can be much more efficient with their time in accessing the tools that they know exist, but previously hadn't been able to access themselves.
That is very, very true. And it's such an insightful way of thinking about how these category of people who are experts, in a way, can get access. Digging deeper into this, like as these experts or these financial services folks who are experts in these areas, as they've started to use Arta, have they pushed you to bring products to them that are particularly sophisticated, that are different? And what are some of the interesting strategies that, you've introduced that people in financial services have gotten really excited about?
Maybe not a fun answer, but folks have been really happy with our suite of offerings. I think maybe two things that stand out is, on our structured product business, people have been loving what we come out with on a regular basis. But the power to be doing something on a more customized basis directly with Arta is extremely attractive. Typically, those tools need something in the multi-million-dollar minimums, and folks can start creating them for themselves at a much lower minimum using Arta. So I think that's one compelling thing for financial services professionals. The reality of the matter is most folks in finance are high earners living in high tax states. And so a lot of the easy no-brainers like direct indexing and tax loss harvesting is extremely compelling as they're looking to not have these very lucrative paychecks all of a sudden be halved with no looking back.
Yeah. So I was actually going to maybe diving a bit into that. Is there like one strategy that you think you wish more finance professionals just used because it's so obvious for them?
I wish I knew about all tax loss harvesting tools so much earlier. And this is not financial advice. But, if you're investing in the 60-40, there's so much more you can do, but at least you're investing. So let's just get started there. There's so many ways to up-level your traditional S&P 500 exposure, whether that's a structured product with increased upside or protected downside, whether it's tax loss harvesting, whether it's direct indexing, so you, Caesar, don't have to hold even more Google stock than you already do. There's so many almost no-brainer enhancements on traditional public market instruments that I wish I had been taking advantage of sooner. And I think the world is really waking up to the fact of, the simple indexes just don't cut it anymore.
Taxes matter. Taxes matter.
Unfortunately.
Yeah. So Tracy, let's switch tracks again a little bit and go a little bit into your life. And so can you tell me a little bit about, can you talk a little bit about sort of how you have balanced, career, your own finances, your personal life? A lot of what we talk about in this podcast is about how people make decisions, you weighing all of these factors together.
If anyone listening has a better answer, I'll take them up on that. But I think I've and this might come as a surprise, but I've been less responsible than I could be about my personal financial picture. And I actually think that reality resonates for a lot of folks in finance because there's a certain level of, I know what I should be doing, I just haven't done it yet, versus folks maybe outside of financial services, like, I don't know what I should do, so I'll take someone up on the help. And I wish something I had done much earlier is kind of sat down with a professional and said, like, what should I be doing? Help me out. I don't know everything. It's not embarrassing to talk to someone, even though I work in finance. I want to take advantage of a broader set of tools that I have. So that didn't do a very good job of answering how do I manage my financial picture with my professional life. But I think in hindsight, I'm very honest about the fact that I could have been doing more much earlier.
That's actually very true. I mean, we hear this from most of our members, right? Like at some point, they're like, I've been putting this off for so long. I'm glad, like, finally I'm sitting down and, I was dreading that conversation or a 3-hour interview before, like, I could get going. So you're not alone here. Absolutely.
It's almost like when you go to the dentist and they're like, how often do you floss? I'm like, the right amount, right? Like, how often do you look at your financial picture? Like, whatever the right answer is.
Yes, whatever. At least look at it.
Yeah.
So, Tracy, I mean, you've obviously done very well in your career and you're doing even better over time. But is there anything that you would go back and say to, say that Tracy was just getting started in her career?
Probably that it's worth it. I think when I first started in my career, I worked at an endowment office working on all asset classes across the board. And I constantly felt like I was drinking from a fire hose. I would go from an emerging markets debt meeting, one half an hour, to a reference call on a credit manager the next, and then to a venture capital meeting, all to go back to my desk and work on an exposures report. And I felt like my brain was constantly spinning. And it was really stressful. I felt like I was doing a pretty bad job at everything. But in hindsight, that kind of trial by fire was really worth it. I think I built a muscle for being able to take on the right amount of a variety of information. And I say the right amount because it's important to key in on the details, but also block out some of the noise. You're never going to know everything. Don't pretend that you know everything. But it's a luxury to be in a position where you can learn something about a lot of different topics. And moreover, like those different topics can inform decisions that feel on the surface to be so far removed from them. But at the end of the day, everything's still tied together. So I guess, my advice to my stressed out 22-year-old self, not knowing that it only gets even more stressful, is it's worth it. You're doing well. This is the time to be curious and to be confused and to ask questions and to learn how to ask the right questions and to keep asking questions and start to build that confidence in what you do know.
I'm glad your 22-year-old self persisted through all of that. And we have the Tracy of today. So Tracy, to close off the podcast, I'm going to ask you 3 lightning round questions. Okay, so these are very simple. First thing that comes to your mind, fill in the blanks. Okay. If you want to prosper, never underestimate the power of dash.
Curiosity.
The 3 key ingredients for a long, fulfilling life are 1, 2, 3.
I would say lead with humanity. Empathy goes really, really far, and it makes relationships so much more enjoyable. And relationships can exist everywhere. Like, lead with humanity. Get outside. And sometimes I mean literally just go touch grass. And it feels like a cop-out, but stay curious. Like, the world's a fascinating, endless place. There's so much to learn, so many people to meet. And I think just having an appreciation for everything that there is around you makes this confusing little snapshot of a life we have so much more fulfilling.
Thank you for sharing that. Last and final lightning round question. The simple joy that adds years to your life is?
Appreciation. Like, it's a cool world. It's nice that the sky's blue today. Like, it's cool that I live in California now. It was awesome I got to be in New York in my 20s. My dog rocks. I just think a general appreciation of someone had a nice comment, someone held the door. There's some science somewhere about happiness and living longer. And I think having a muscle for appreciation helps you tap into that happiness a lot more regularly.
That's so beautiful. Appreciation and gratitude. But on that note, thank you so much, Tracy, for being on Live Long and Prosper, for being at Arta, and for everything you do for our members, for the tremendous passion, expertise, and appreciation you bring to all of our members. So thank you.
Right back at you. Thank you, Caesar.